We are going to move to a world where everything that can be digitized will probably be done so.
Digital assets treated as an asset class, regulators and big financial institutions adopting different technologies, stablecoins, CBDCs, tokenized deposits.
It raises questions about the independence of a central bank, about a sovereign's ability to regulate its own banking system. These are thankfully questions that public sector is starting to ask, but I don't think anybody has a profound answer on that yet.
This is a new episode of Rewiring, which is a podcast series from SC Ventures. I'm Harald from SC Ventures, and today I'm joined by Eric Robertsen, who's our global head of research at Standard Chartered Bank. Eric, great to have you.
Thank you, Harold. Good to be with you.
Eric, I think you spend most of your time actually analyzing the big macro shifts and how it has an impact on global economy and for the group. I spend most of my time building ventures and trying to find little solutions that can address some of those big shifts that are happening. So let's talk a little bit about the big macro trends. So what are we seeing?
I do think there are elements of what we're seeing today in the macro, in the technology space that are really challenging us to think differently about the world. I think most of us believe that what we're seeing today is not a normal economic cycle, right? I mean, the geopolitics is having enormous ripple effects across all economies. Then you add the technological aspect, right? Whether it's the AI space or digital assets, all of these things coming together at the same time. And so it's forcing all of us to go back to this whiteboard and say, are our assumptions still valid? Is the way that we think about the world still valid? Not only do we need to change our conclusions, but do we need to change the way we analyze? And so it's fun, it's challenging, and it's pushing all of us, regardless of experience, to take a step back and rethink.
It's almost like a meta shift, if I could use that term, right? Where it's just not one factor. It's the combination of all these factors together. To your point, it's geopolitical uncertainty. I mean, it's been happening for a while, but it's so much impacting certain principles that you and I grew up in, which was, global economy, global trade, open trade, labor, connecting labor with dollar and making everything smooth and so forth. And this is completely shifting to now microcosmos, friendshoring, nearshoring, blocks of countries together versus others, etc. And that, I think, is a big shift from what we saw in the past, 20 to 30 years.
Yeah, 100%. Look, and the way we always think about the macro is that chaos and disruption breeds opportunity, right? And I think what we're seeing today is the collision of these factors is forcing people to accept that it's an opportunity and embrace that it's an opportunity. Because if you keep doing things the way we did them 5 years ago, you're going to get left behind. Yeah. And some of that is very traditional, old economy, business cycles, et cetera. But the other part of it is, as you alluded to, we've gone from globalization to regionalization or more fractured supply chains. And I think people have correctly recognized that that is an opportunity to use smart contracts, digital solutions, new infrastructure, new architecture that allows people to overcome some of this kind of fracturing that we're seeing going on.
Yeah, exactly. And if I was to take it, at our small level, you talked about global supply chains and global trade. So we built a few ventures. One of our venture is Olia. I don't know if you're familiar with it or not, but it's a trade finance platform and really supporting small little suppliers be efficient at what they do, not just because they're cheaper, but actually because they have real expertise. Something like a real asset that is interesting. I would say 2-3 years ago, global funders, global investors, and now actually we see that those investors could be more local, and through the use of technology, you can just connect them and you can finance those trade assets a lot more efficiently. When you didn't even know that, 2 or 3 years ago, right?
100%. And that reminds me of something that we talked a lot about at Standard Chartered probably 8-10 years ago, which was banking the unbanked, right? Which was a retail concept. It was like, how do you give people who don't necessarily have access to traditional branches, how do you give them access to banking services? Well, the mobile phone became the conduit for that. And I sort of see what's going on in your space, and this is just a very simplistic outsider's opinion, but I see what's going on in your space as that concept on steroids, right? Just going exponential. Like, how do you provide, whether it's financial solutions or technological solutions, to people who maybe because of their small scale might not otherwise have access to it?
That's right. Yeah, so we talked about the changes in global economy and geopolitical uncertainty and how this has an impact for a global financial institution like ourselves. You tackled as well one aspect, which was AI.
Yep.
And I think obviously AI is in the mind of absolutely everyone. And I think over the past 2-3 years, probably more, but we were really looking at AI from an experimentation perspective, from a product perspective, software perspective. We're really now trying to, how do we scale this, right? And how do we operationalize AI? And it's really a lot more about, infrastructure, operationalization than experimentation. But how does this impact what you see as well?
The immediate answer is that, I think a lot of people first looked at AI as, how does that threaten my job? Mm-hmm. And then it was, well, actually, how do I use AI to do my job better? But it was very much a self-interested discussion, right? Think about the research world, people starting to think about, how do I use AI to do more analysis and to become more efficient? But I think the important breakthrough in mindset is not just thinking about how each of us as individuals do our jobs better, but like, how can I use AI as the head of a business to deliver more to our client base? How do I use AI to make the customer experience with research more personalized, more cutting edge, more sophisticated, and actually use it to get feedback from the clients that may not otherwise have been readily available? And that for us is the game changer. And we see that across all of our business in CIB, right? There's the operational side, which to your point helps us scale because we can go bigger, we can go faster. But then there's also the aspect of the customer experience. And one thing that we believe very strongly is that AI and tech doesn't replace the human interaction, it has to complement it. Because if you think about any great customer business in any industry, the one thing they do is they combine the product side and the experience side, and they make them work together. And I think that's what we have to use AI to.
Yeah, I think like other big financial institutions, or like we could make a big announcement and, hey, we're investing X millions of dollars into AI, or announcing big partnerships with this company. I think we purposely decided not to do that because, to your point, it's how does this impact in a positive way our internal practices and our client experiences, right? So I think that was the mindset globally. And so we wanted to have a true meaningful impact. And so the first thing that we did is we set up what we call SC Ventures AI Lab, where we collect AI ideas, we source them, and we evaluate them in order of how impactful they can be and how great of an AI use case it can be. So we set up this AI Lab, I want to say, probably 9-10 months ago. It's a very lean lab. Also, lab sounds very experimental, and it's not. It's practitioners. So we have engineers, data engineers. We have data scientists and researchers. But we also have solution-driven people who can think about product and how to implement these products. And of the AI lab, so we've collected roughly 3,000 AI use case, 3,000 AI ideas that can improve the financial industry at large. It could be very small ideas to very big ideas. Yeah. And we operationalized, I want to say about 20 of them, going from a venture in partnership with Atomi on creating a securitized engine of private credit in Indonesia, but identifying through AI what is the right kind of asset to go into these securities and then making them available to global capital market investors. Right. So that's an example. It's called Nusavest. That's something we recently created. But we looked at how do we provide an experience to managers so that they can have difficult HR conversations with their teams, which is always a challenge. And so that's something we did in partnership with INSEAD, the business school, through avatars and AI conversation, basically. So, and I could go on and on. But so AI Lab, by the way, we make it available to the business so the business can come with ideas and then productize, I would say, these use case into either ventures or something that the business can use.
That to me is kind of the really big opportunity, right? Because it obviously has to be financially viable, right? I mean, venture, by definition, there has to be an expected return. But I think the adjacencies to the traditional banking business have to exist, right? Like there has to be this exchange of information because we'll have ideas about things that we know will make our business better. You guys will have a much better insight into whether that already exists or whether it's something that needs to be built, right? And I sort of see the next step. I mean, we've just had a big kind of AI thinking out loud session within research. And one of the things that was very clear to me is we just need to think bigger, right? And part of it is because we just don't know what's out there. And so we need to start having conversations with people about what is out there.
Yeah.
What could we tweak that would make us 3 times better or 3 times faster or 3 times more interesting to our clients?
Yeah, and I think that's a constant healthy feel, by the way, to think that we're not up to date, that we think we're behind, etc. I think when you think you're not behind, then there's a problem, by the way, right? Because you're not innovating anymore.
Yeah.
Innovation comes from either frustration or the fact that you're not the leader in your industry, and as a result, you constantly need to be better and to offer things that are different.
Let me ask you a question. One of the things that I talk about with my team in research is, it's a sporting analogy, but is going to the open space, right? It's really hard to add value to clients if you are going down the same path that 20 other banks have done, right? So we've always trying to find like the untouched ground. How do you guys think about that from a venture point of view and from a new business idea point of view? Because I would imagine there's so many temptations to go down rabbit holes that frankly are just not going to go anywhere.
Yeah, no, so it's a constant exercise of, I would say 2 things. So scanning what is already available, because to your point, there's no point in creating something that already exists or doesn't really solve for a real problem. The second aspect, to your point, going in open space is you don't know what you don't know.
Yeah.
And if you just stick to your little corner or to what you can see in your immediate horizon, then you're not thinking of what actually is the future of finance, or what is the future of banking.
One of the things that we think about in CIB is this idea that one of the areas of expertise that we have is it's not just macro risk, it's not just credit risk, but it's what we call jurisdictional risk, right? It's the nuances of some of these emerging economies and the recognition that we have expertise in some of these places that many other people do not. But what you guys are doing, the cutting edge of tech and AI and innovation, is regarded by many people as not accessible by those deeply emerging economies. How do you think about delivering that innovation to places that frankly feel like they're still really far behind?
First of all, the gaps that existed a few years or decades ago are shrinking drastically because of technology adoption and the ease of adoption of these technologies, right? So a little tiny village in a remote place in Indonesia that didn't have access to education now can have instant access to education or products because of availability through search engines and ChatGPTs and all of that, right? So I think these gaps are completely shrinking. And I would say it's also the deglobalization of knowledge, where we thought that pockets of knowledge were in very focused areas in the world, and I think that's less and less true. And we saw it recently on AI, where we thought everything was driven by the US, and all of a sudden DeepSeek comes in and they did it for a fraction of the cost. And all of a sudden we're thinking, have we overspent on software and over-engineered it? And so if like a little tiny venture in Hong Kong can do it, so I think these gaps are massively shrinking.
Yeah, and it was fascinating. I was just in China 2 weeks ago and had the opportunity to see in real time and face-to-face some of their AI adoption developments, and it's spectacular, right? I mean, some of the stuff that was visibly on display, combining AI with robotics in the area of medical, for example, something near and dear to my heart at the moment, right? I mean, robots that can perform surgeries with incredible precision.
Yeah.
I just found the adoption rate in China really impressive. And it reminded me of the social media analogy, right? I mean, the US had it first, and then China just took it to the next level with social media, payments, et cetera, et cetera. So.
Yeah, well, yeah, 100%. And I think, the other aspect of AI is, again, moving from software to now a lot more infrastructure. And I think now, because AI is so embedded into energy, into IP, knowledge, these kind of things, we can actually see that AI is becoming an embedded part of certain countries or regions, and we're going to see it more and more. I think really AI as infrastructure versus AI as just only software.
This idea of how the opportunities that you guys see and are potentially investing in, what are some examples of projects that you guys think are really leading us down that path?
Yeah, we built and invested in a few ventures that enable these local economies to bridge the gap even quicker, I would say. And so one of the very first ventures we created was a company called Solve, which was in India. And so enabling the digitization of little suppliers so that they could have a more impactful reach, right? But also digitizing their operations, right? Because you're talking super small SMEs in India. Yeah. Right? And so that don't have online stores, that don't have order management systems and all that. So Solve was one of our ways to enable the digitization of these small suppliers in remote areas, and then providing them with the tools so that they could increase their visibility, they could increase their reach in their distribution. And so Solve was acquired by Jumbotail, I want to say a little bit over a year ago, and now it's one of the largest promising fintechs in India. I think probably the largest B2B e-commerce platform in India, or one or two, in the top one or two. So these are some of the things we're doing. And we're doing something similar in the Middle East, by the way, in Dubai, where you are, with a venture called Hall, which again enables local SMEs to modernize their operations.
So it gives them access to, I don't want to say centralized, but gives them access to the tools that they need.
That's right. Give them access to more tools and give them access to more financing opportunities as well, right? Because this is how they're going to grow ultimately. So this is also, one of the things that we've done. Are there areas where you think we're not going fast enough, or where we haven't really made any significant progress? What are your views on certain either areas, technologies, countries?
One area that I've been struck by and it's a very selfish one because it's related to the research business, but I think it's applicable to everything we do in banking where we're so client focused, is the ability to interact with people who are not native English speakers, right? We've always been dependent on simultaneous translation, interpreters, this, that, and the other, and it's always been very disjointed. And I've seen some technology recently that is starting to bridge that gap, where you can have conversations with people in real time that are not speaking the same language. And whether it's smart glasses or smart VC platforms, however, everything that I've seen so far is very glitchy, right? I don't think we're there quite yet. I don't know if you guys have seen anything in your endeavors, but
yeah, I think, agreed. I think communication still, if you're communicating with two people who are just so different that they can't understand each other, I think that's an area. I think I mentioned Lexarius, which is our inside venture, but that's one way for us to address it. I think the other area that we've looked, which is a little bit future, longer horizon, is something that we've recently done with Fujitsu. It's a quantum-inspired technology called Cubitra. And so how do we benefit from quantum technology for faster information, for better decision making, for better fraud detection, for instant pricing, for these kind of things? And I think, when we talk about it, people are still like, yeah, sure, but we're 5 years away from that. And
so that raises an interesting point. So it feels like a lot of these topics, whether it's tokenization, AI, digital assets, I mean, you name it, it has felt like it was 5 to 7 years away for a long time. And now all of a sudden it feels like all of it is immediate. How do we differentiate between what is essential now versus still kind of, a fantasy?
Yeah, and I think, that's where we make a difference as a group. Because being part of a bigger group enables us to, do some experimentation with intent, with a bigger impact, potentially with balance sheet that others don't have, but at the same time, enable us to be a little bit more patient than a VC that is just financial return, which needs to happen in the next 12 to 18 months. And that means you can't really bet on the next innovation, and you need to bet on something that is within your reach. And I think this is where, as a group, we can address it better, because we can actually foresee some things that others don't see, embed it or adopt it in the bank, and then scale it when it's ready to scale.
Right.
I think that's...
And the ability to embed it within the bank, get feedback from customers, tweak as we go, real time, mark to market. That feedback mechanism is really valuable, right? Because you can course correct if you need to.
Absolutely. That's quite unique. Actually, I haven't seen it in many different places. You spoke a little bit about digital assets. One thing that the BlackRock CEO said, which is everything is going to be tokenized and everything will be on chain. How is this going to impact the financial industry?
So I think the answer to that question has changed a lot in the last 2 or 3 years, right? Because 5, 6, 7 years ago, that question was still very much fringe, right? Like there was not any sort of institutional acceptance or adoption.
I think it was digital asset as an asset class.
Correct.
Right? It was
and that's a really important point, because when we decided to start doing research on digital assets, the member of my team who put his hand up to do that, Jeff Kendrick, said, look, I think it's really important that we don't treat digital assets as just another currency or just another commodity. Like there's something bigger going on here. And to his credit, he was absolutely right. And so the clear positive is the digital infrastructure and architecture is going to allow much more efficient processing and transacting across jurisdictions, boundaries, et cetera, right? I mean, smart contracts, this, that, and the other. It just opens up a world of financing possibilities for people who may have struggled before. That's the positive. The question mark is, take something like stablecoin, right? I mean, the idea that an emerging economy that maybe doesn't have the most robust currency all of a sudden starts to adopt, say, a US dollar or an RMB stablecoin. I'm making things up. All of a sudden there's demand for that at the expense of their home currency. And then what does that mean for their banking system, right? I mean, the questions that are coming out of a very modern product that go back to very old school traditional banking 101, I think is just a massive inflection point that we're going to see. So to your point, yes, we are going to move to a world where everything that can be digitized will probably be done so. But it raises questions for policymakers, central bankers, banking regulators, et cetera. And I don't think we've fully figured that out yet.
I don't think we have, and don't quote me on this, I'm not a macro strategist and everything, right? But I think back to what you were saying, 2-3 years ago, digital assets treated as an asset class, regulators and big financial institutions adopting different technologies, stable coins, CBDCs, tokenized deposits. I think there's a little bit of a winner on the form of stable coins, but it poses huge questions to your point of central banks, right? Am I going to adopt a stable coin that is denominated in another currency and by a startup a well-financed startup, but a startup in the US, by the way. So.
And look, it raises questions about the independence of the central bank, for example, right? And it raises questions about a sovereign's ability to regulate its own banking system and its own economy. And I think these are, thankfully, questions that the public sector is starting to ask, but I don't think anybody has a profound answer on that yet.
Yeah. And I think it's a question as well that is really being asked for now I would say still at the institutional level.
Yeah.
And hasn't come down to retail, because if you were to ask anyone, any consumer in the street, I'm not sure they would have an opinion, right? They would go.
No, I mean, if you think about it from a retail point of view, I think we're still in a world where most people view digital assets in whatever form you want to talk about as some sort of a store of value, right? Whether it's diversification away from fiat currency, diversification from something else, people still view it as an asset. Whereas I think what you're saying, and I think we agree with this, is that it's not just an asset, it's going to be the guardrails, it's going to be the infrastructure.
It's going to be the infrastructure.
And that's where the mindset shift, I don't think, has happened. It's happened, in the technology world and in the banking world, but in the retail world,
not yet in the retail world. And I think, there needs to be a shift from to your point, store value to almost a utility value.
Yes.
Where people use it for, mostly for payment, I guess, right?
So here's an interesting question, and this is something that I don't think anybody has answered well, but I'd love your opinion, which is, if you think about that word, utility, right? If we move into a world where it becomes a utility, how profitable can it be?
Yeah. Well, I think who recently said, well, I think it was actually one of the big asset managers in the US said, actually, stablecoins cannot derive any value. They need to be flat. Right? So at some point, stablecoins can just be, as a matter of fact, a currency or a utility. But that doesn't mean that other traditional assets, and we can talk a lot of what's a reasonable RWA, but these are the ones that actually need to provide some value. And it should be their role, not the role of a stablecoin.
Let me ask you a more philosophical question. I mean, in banking, for the entirety of my career, every 5, 6, 7 years, there's an innovation or a political development that people think is the end of banking and financial markets, right? I mean, the emergence of the EU, right? People thought it was going to destroy currency markets, and it didn't. They just evolved. We're hearing the same thing again today, whether it's AI or digital assets, people saying, oh, this is a threat to traditional banking. How do you think about it as a complement to what we do in traditional finance?
So overall, the banking industry provides a lot of the necessary guardrails for society to function well. It's evolved massively, but it still has core value and core principles that are extremely useful to society. And if I was to go, again, maybe 3-4 years ago, and I don't want to be, creating a debate around that, but the collapse of FTX, for example, was because, well, now we know as well that there were a few things that were not done properly. But initially, it was like, we'll be the bank for everything. We'll provide the interface, we'll provide the savings, we'll provide, the trading, we'll provide everything. Well, with no segregation of role, no segregation of assets, no segregation of duties, and all that are good things that are set for the benefits of society. And banks are a very strong component of that. Yep. Now, what banks will look like in 10 years, quite frankly, I don't know. But will banks continue to exist?
Yeah.
I think so. I think, because we're part of society, right? And we're very embedded with regulators. We have a role to play of keeping things safe, for example, right? Enabling the financing of certain assets, providing different, optionality to investors at all levels so that they understand their risk as well, right?
But that's the key, right?
What do you think is the role of banks in the future, and how, AI or digital assets have forced traditional bankers or traditional bank players to continue to innovate, to continue to provide value to their customers?
Yeah, I guess the first thing that comes to mind is that AI is, to some degree, a tool which will level the playing field, right? You talked about narrowing gaps, and I agree with that. But I still believe that different institutions will have different degrees of risk tolerance. Different institutions will have a willingness or an ability to deploy expertise in places that maybe others don't. I mean, I spoke earlier about what we think is our expertise in jurisdictional risk, right? Helping large multinational corporations set up and operate in difficult to operate places. Yeah. And I think AI will allow us to do that better. I don't think that necessarily completely levels the playing field so that everybody can do what we do. So I think the willingness to take different kinds of risk, the willingness to take advantage of certain inefficiencies or arbitrages, that's not going to go away. And so I think tech will give us the ability to do that better. I don't think it eliminates opportunity. In terms of digital assets and tech and how we think about research, for example, for me, the critical factor is you have to separate it into different buckets, right? There are going to be new ways for old-fashioned analysts like me to think about data, right? Like, we're not just going to get our data from Bloomberg or Reuters, right? I mean, things like satellite is going to offer alternative data that we maybe haven't used before. And thinking about ways to harness that technology to just give us better insights, right? So that we're not always chasing our tail, right? And for me, that's kind of the exciting next step for both research analysts and more traditional client-facing bankers.
Yeah, I think people, back to the very early start of this conversation where we were like, well, we've gone from seeing AI as a threat, where AI was going to take away our jobs, to now augmenting our knowledge actually with AI. I think that's, we have access to just more information, quicker information, draft our narrative better, ideally, and servicing clients and our other stakeholders better. I think that's where we're at.
Take an economy in a country like China, right? We know they have a demographic challenge, right? We know the size of the population is shrinking. We know the size of their labor force is shrinking. And so when I spoke to a few corporate CEOs recently about their use of AI and robotics and what that means for their labor force, they were quite unapologetic about the fact that their labor force is shrinking anyways, right? So we have to adapt. We have to learn how to do what we do successfully with fewer human beings in our factories and in our offices. So they're viewing it as a solution to a long-term economic problem. Now, that doesn't mean there won't be enormous disruption to their labor force in the short term.
Yeah. No, that's such an interesting point, because I think mature economies are seeing massive impact in demographics. Does it mean that we're just going to shrink as a species? Sorry, we're going very philosophical now. But are we going to shrink as a species and we've reached our max, or we're going to reach our max in 20, 50 years and we'll just shrink from there? Or, and we'll be augmented, supplemented by AI? I think this probably has been, my best discussion this year, seriously. So thanks.
Was it your only discussion?
No, it wasn't. No, I do see people. Yeah, hopefully we can do this one more time.
Be great. Thank you, Harold.
Cool. Thank you.